You've been lied by hundreds of trading gurus out there that you have to understand the price action to become a profitable trader. You have to read the market structure, do the top-down analysis, and look for the perfect levels to enter. But what if I told you that all of that is complete bullshit? What if instead of being an endless grind where you feel like you're constantly beating your head against the brick wall, you can build a dream strategy where you are not only trading without complex technical analysis, but it also lets you trade without second guessing every trade you take. And most importantly, that can be done spending just 10 to 15 minutes a day, so do you actually have time to do the things that you love to do that actually matters in life. But how the hell do I know that all of that is possible? About 4 years ago, I've built a complete rule-based trading strategy that gave me a mechanical edge over the market. Using that secret weapon, I was able to become multiple six-figure funded trader, allowing me to leave my 9-to-5 job, reinvesting my trading profits to gain a financial freedom and build the life I've dreamed about. Along that way, I've helped hundreds of other traders to become consistently profitable by gaining a mechanical edge over the markets inside of our OP Investing Mentorship Program. This is the first episode of the 4-part mini-series where I will take you through the exact blueprint that will help you to master a mechanical edge over the markets to scale your trading to 6 or even 7 figures in the next 30 days without guessing your trades or being glued to the charts. About 5 years ago, I was just a kid working at a corporate job at one of the big 4 audit firms. I always had a dream of changing my life through trading, but back then funding firms were not popular. So after getting my college degree in economics with finance, I took the 9-to-5 job to fuel my dream with more cash. At that time, smart money concepts, trading like banks, Wyckoff theory, all of that was booming. My main goal was to build a trading strategy that removed the guesswork from my trading, and most importantly, I wanted a strategy that won't require much time so I could actually spend it on the things I loved. Because back then, I barely had any free time. My job drained all of my attention and energy. I was stuck working with numbers and tons of data every single day. Deep inside, I felt miserable, knowing how much work I was putting in and how little my time was actually worth. After spending months as trading SMC, I came to a realization something had to be changed. I was facing a number of problems, and if you're in the same spot I was in 5 years ago, you will probably relate to this. First of all, it was overcomplicated and filled with subjectivity. There were dozens of ways to read the market structure, dozens of order blocks, fair value gaps, all of them technically fitting the rules of the strategy. But the irony, I had to somehow choose the one to place my trade. And every time I took a loss, I would journal it and take it to my mentor. And I'd always get the same answer. I wasn't experienced enough. If I practiced more, I would supposedly train my ability to find the perfect levels to enter. It was an absurd. It felt like I was being told to train my gut feeling, which is crazy because I knew I couldn't rely on gut feeling if I wanted to be a consistently profitable trader in the long run. That's when I started my journey to find a mechanical edge over the markets. I realized that if I wanted to become consistently profitable without guessing, I had to develop a simple rule-based trading plan, one so clear that even my grandma could follow it. So where did I start? After analyzing all of the problems with my current strategy, I decided to build a new system around the 3 core values. 1. Trading simple patterns. 2. Spending no more than 15 minutes per day. 3. Trading without bias. After months of testing, it felt like nothing was working. But as I dug deeper, journaled everything and reviewed years of data, things finally started to click. I developed a day trading strategy based on trading simple patterns around the key trading sessions, and very soon I noticed something different. I was no longer forcing my trades. Instead, I let the market show me where the flow was going. I stopped having the bias. I started sleeping better at night. I was more present when spending time with friends and family. Maybe that was because of the magnesium I was taking, but I think it was because of the system I built that finally reduced the uncertainty in my trading. I had a clear routine, just a few minutes at the start of the London and New York sessions, and I was literally free for the rest of the day. I steadily grew my account, and during the boom of prop firms, became a multiple six-figure trader. I left my job, reinvested my profits, and built true financial freedom, the life I had always dreamed of. But this wasn't just for me. Since 2022, I've personally mentored over 300 traders just like you, traders who transformed their lives by using mechanical rule-based patterns. That's why I highly suggest you to watch all 4 videos in the series I have prepared for you. But before we dive into more technical part, you first need to build a strong conviction that trading a fully mechanical, rule-based, bias-free strategy is the only way to become a consistently profitable trader over the long run. If you don't do that, this is going to be just another brain rot video that you watch today but never take action on. So stick till the end of this video. The biggest problem I see in trading space is inconsistent results. I get messages like, "Hey bro, I've been trading for ages. I literally know everything about trading. I've learned all the strategies out there, but I'm still struggling to make consistent profits." And if you don't understand why this happens to people, this is exactly what you will end up in the future. The reason is simple. People are going against the nature of trading. Trading is pure probability game, and price movements in the markets are random. But what do most traders do? They try to read markets to predict where the price will go. They trade based on their bias, which they've built analyzing the market structure, looking at liquidity behind trend lines, equal highs, or other some BS series. They have a millions of reasons in their head why the price must go up or down. If I tried to list all of them, we would be here for the whole day. But here's the problem. Trying to predict the market actually leads to the trading based on their feelings, not on actionable, repeatable, rule-based system. And the consequences of trading without a structured plan, they are devastating. Without a structured system, every trade feels like a gamble. One day you win big, the next day you give it all back. You can't trust your own decisions because they are based on emotions, not a proven process. So let me break down my own experience trading the smart money concepts, and I bet you have faced some of these problems. First of all, as you know, SMC is mainly based on reading the market structure, doing the top-down analysis and getting the buys from that. It gives you the full sense of control, like you know where the price is headed. But in reality, sometimes you're right, sometimes you're wrong. It's a pure probability game. Instead of accepting the loss, you start questioning your skills, asking yourself what mistake you've made. Every time you take a loss, your self-confidence takes a hit. Then you start adopting every trade you take, you end up miserable and depressed. But that's not even when the problems end. Now, don't get me wrong, I'm not against higher time frame analysis. When used the right way, knowing you're playing with the probabilities, it can actually be a good thing. Trading in the direction of the trend increases your win rate by 60%. And here's where traders mess up. They start mixing multiple time frames when doing the top-down analysis. For those who don't know, this is when you identify the market direction on the higher time frame, mark out the key levels on the higher time frame, wait for the price to approach these levels, jump to a lower time frame, analyze the market structure, and look for entries. Sounds genius, right? In reality, it's nearly possible to trade it. Let me explain you why. I've tested years of data on this method, and there are 2 major problems. Problem number 1, no confirmations on the low time frame. Over 50% of the time, price retests those higher time frame levels but never gives a confirmation on the low time frame. What does it mean? It means that there's no structure to trade it on the low time frame, just a strong impulse with no setup. So basically you can't even enter the trade. Problem number 2, the levels you choose might never get hit. This is even a bigger issue and leads to multiple bad consequences. When you're doing a higher time frame analysis, you might choose a key level that's super far away from the current price. And here's the risk. That level will never get mitigated. Price might never pull back deep enough to test it. So you wait for days only to watch price reverses from a level that you didn't see. And here's when it gets even worse. Since you take a lower time frame entries, you consider yourself a day trader or even a scalper. You want to trade every day, but in reality, you have to wait for days just to get one trade. That creates inconsistency in your trading. You feel like you need to take trades, but there are no setups. That leads to constant feeling of FOMO. And if you keep trading like that for months, your nervous system will be wrecked. So if you're tired of this cycle and want to finally break free from that, keep watching. And the biggest problem with the top-down analysis, the one I struggled for years, and I bet you do too, is this. You know where the price will go, but you never know when. Back then, I used to do top-down analysis, mark up my key levels and wait. But most of the times, price would retest those levels when I was not even at my charts. I was sleeping, eating, working out, doing literally anything except watching the charts. Imagine this, you've been waiting for the setup for days or even weeks, and when it finally happens, you miss it. This is kind of like frustration. It's a next level. The FOMO was unbearable. There were days where I completely lost control over myself, either because I missed the trade, price reversed without giving me entry on the low time frame, or price never even mitigated my level in the first place. And here's the final nail in the coffin of the price action trading, or any strategy that relies on the higher time frame analysis and low time frame entries. You are going to have an extremely low win rate. It's not humanly possible to catch the perfect reversal at the first hit. People who flex with insane risk-reward ratios, most of them have a win rate which is below 50%, which is below, 5%. And trust me, such a low win rate will destroy your psychology. You'll start doubting every trade you take, you'll start hesitating, overanalyzing, and second-guessing yourself. And ultimately, if you keep trading a non-mechanical strategy, one of the two things will happen. You will eventually give up trading altogether after wasting tons of money trying to figure it out, like on yourself. And secondly, which is even worse, you will not give up. You'll just keep burning the hard-earned money, trapped in the cycle of overtrading, revenge trading, and emotional gambling. At that point, trading won't be a business for you. It will be gambling addiction discussed as a trading. You'll become just another guy chasing adrenaline, winning someday and losing even more the other days. Now, ask yourself honestly, did you come here for entertainment? Or did you come here to actually make money with trading and change your life and the lives of those who are around you for good? Before we dive into the next lesson, let's quickly talk about the mechanical edge or the markets and why trading with one is a game changer. The main goal of mechanical edge is simple: to remove the guesswork from trading so you can win trades without overcomplicating your analysis or being glued to the charts all day long. Why do you need a mechanical strategy? Have you ever learned a strategy from someone else, but when you tried to use it, you failed miserably? That's because most strategies are not fully rule-based. You can't simply copy someone else's experience. That's why your favorite guru keeps telling you, spend more time in front of the charts and backtest until the strategy finally clicks. And maybe that will work for some people, but here's the reality: 95% of traders fail. So if you want to increase your chances of actually winning this game, you need a strategy that you can replicate and execute consistently, not just some vague, discretionary system that relies on your intuition. The benefits of mechanical edge. First is the clarity. You will know exactly what setups to trade and when. Most traders overtrade not because of the bad psychology, but because they don't even know how many trades they should be taking. Here's the truth. Scalpers will get 1 to 2 trades per session. Day traders will get 1 to 2 trades per day. Swing traders will get 1 to 2 trades per week. But when you trade a non-mechanical strategy, you don't follow the clear setups. You just try to read the markets and predict the future price action. With a mechanical strategy, you trade only specific setups that occur under the clear conditions. So with this one, you can actually differentiate were there your setup or there was no your setup. For example, in OP method number 1, we mark up the first 4 hours of the Tokyo session, trade the breakout during the London and New York sessions. There is only one breakout per one direction, like one breakout to the upside, one breakout to the downside. If price breaks out, retest the Asian range and gives an entry. I know this is my trade for the day. If I miss it, that's fine. I know that there won't be another setup later. Then there can't be another breakout and retest of the Asian range because it's already over. This removes the FOMO and stops you from taking random trades out of the desperation. 2. No more self-blame. When you trade a non-mechanical strategy, every time you lose, you start questioning yourself. Did I make a mistake? Should I have entered earlier? Did I read the markets wrong? With the mechanical strategy, those doubts disappear. Let's say we're using the OP method number 1. We mark up the Asian range, we see a strong breakout, price retest during the trading sessions, we take the trade. If it loses, no problem. We did everything right. That's just a part of the game. 3. You know exactly when to trade. Time matters. A mechanical edge includes a time-based element, like how the first 4 hours of the Tokyo sessions are always the same. With this approach, you will know exactly when setups will form and when to stay out. In the long run, you're going to have these benefits. Less stress. You accept the uncertain nature of trading. More confidence. You stop second-guessing every decision. Consistent actions. And as you know, consistent actions to lead consistent results. With consistency, you can grow your personal trading account, pass funding challenges easily, make consistent profits to reinvest into passive income streams. And this is when trading changes your life. This is when the strategy that you have mastered funds the dream life that you actually want. Where you become a multi-6-figure trader, stack cash, quit your job that you hate and live the life on your own terms. Trading from anywhere, traveling the world, doing whatever you want. This lesson was the stepping stone to understand what it takes to become a consistently profitable trader. Now in the next video, I'm going to break down 3 core entry models that will change the way you trade forever.